USDA loan. What are the perks? Why do I recommend them? Why is it 100% financing? We're going to cover that in this episode. Hello, everyone. Welcome back to my channel, your go-to source for mortgage insights and home buying tips. Today, we are diving into USDA loans. These are a fantastic option for those looking to buy a home in rural and suburban areas. If you're curious about how to qualify for a USDA loan and whether it's the right choice for you, stick around. Let's get started. First things first, what exactly is a USDA loan and why am I a fan of them? So USDA loans are government-backed mortgages provided by the United States Department of Agriculture. They aim to promote homeownership in less densely populated areas by offering benefits like zero down payment and competitive interest rates. These loans are perfect for moderate to low income families who might not qualify for traditional mortgage. And so that's why I am such a huge fan of these types of loans, is because it makes it easier for people to get into a home. Yes, granted, it is in a rural or suburban area, not too close to a city, or it might be close to a city, but it gives you the opportunity to become a homeowner at 100% financing, sort of like if you're a veteran, where they also give you 100% financing as one of your benefits. Let's break down the key benefits of the USDA loan. As mentioned, it is a zero down payment. Unlike most conventional loans, USDA loans allow you to purchase a home with no money down. They do come with lower interest rates. USDA loans often come with lower interest rates compared to conventional and FHA loan. They also have flexible credit requirements. While a minimum credit score of 640 is generally recommended, USDA loans have more lenient credit requirements than conventional loans. They're kind of like, think of them as a brother to an FHA loan, where an FHA loan allows you to come in with a 3.5% down payment and still more flexible credit requirements as well. But this is just like the cooler older brother, maybe, sort of, I don't know, but giving you 100% financing. Now let's talk about the eligibility requirements for these type of loans. To qualify for a USDA loan, there are specific requirements that you need to meet. And so here is a really quick overview. The first one, and this is the most important one, it is the geographic requirements. The property must be located in an eligible rural or suburban area. You can check eligibility maps on the USDA's website to see if your desired location qualifies. And it's a really cool tool where it allows you to put in your address, and it'll essentially give you a thumbs up or a thumbs down if it does qualify for a USDA type financing. Now, next, income requirements. Your household income must not exceed 115% of the median income for your area. USDA loans are designed for families who demonstrate economic need. Again, this is why I'm such a huge fan of this program, because it really helps people become homeowners. There is also a credit score, and while many lenders require a minimum credit score of 640, there may be some that are more flexible depending on the specific lender. Debt to income ratio. Most lenders look for a debt to income ratio of 41% or lower. This means your monthly debt payments, including your mortgage, should not exceed 41% of your gross monthly income. Again, this is before taxes, your gross monthly income. Residency. You must be a U.S. resident, non-citizen national, or a permanent resident, and the home must be your primary residence. So next, let's talk about the USDA loan application and what that looks like, right? So one, you check your eligibility before applying, ensure that you meet the basic eligibility requirement regarding income, credit score, and the property location. Next, this is pretty much the same as with any financing. You'll gather the necessary documents you'll need to provide proof of income, employment verification, credit history, and personal identification, of course. Then comes the pre-approval process. This is where you contact USDA approved lender. Mostly everybody is approved to get pre-qualified. This gives you an estimate of how much you can borrow based on your financial situation. And this is also going to allow you to determine how much house you can afford and stay within your specific budget. Next, once you are pre-approved and everything looks good and you know your budget and you are comfortable with that budget, talk to the lender. They provided several options. Next, you're going to talk to your real estate agent. Property search, right? Once you are are pre-qualified, you're going to start looking for a property that meets the USDA guidelines, and this home must be your primary residence as stated and located within the rural area or the suburb that is still considered rural. So after you find the right property, your lender will guide you through the application process, which involves a thorough review of your financial situation and additional documents as stated. Then comes the appraisal and the inspection. The lender will arrange for an appraisal to ensure the property meets USDA standards. An inspection may also be necessary to check for any issues to make sure that you are getting a good property and that it's able to be financed as a USDA home loan. Finally, then you have your final approval and closing. Once everything checks out, you'll receive final loan approval and you can proceed to closing. And that's it. That's really it in a nutshell. I want to say the most important thing here is make sure the property is in a rural area and make sure that you're comfortable with the payment, and make sure that whether it's in a rural area and you're going to have to drive 30-45 minutes, make sure that you take that into consideration, because this is going to be your house, this is going to be your primary house. And so that is something that a lot of people don't take into consideration when buying 50 minutes, an hour away from work. So now getting into that, let's weigh the pros and cons of USDA loans. A pro: no down payment requirement, competitive interest rates, lenient credit and income requirements. So these are all pros, right? And these are the I would say the most popular pros. Now let's talk about some of the cons. I would say one of the cons is the limited to the rural and certain suburban areas. So that's probably one of the biggest cons for me, in my opinion, is that, again, it's going to be in the middle of nowhere or somewhere that's not as desirable to most people or to some people. You're also going to have income limits that may exclude some borrowers because they might make too much. Mortgage insurance fees are, of course, required. So that's something that you got to keep into consideration that goes into your payment as well. In summary, USDA loans can be an excellent option for those looking to buy a home in eligible rural areas or suburban areas, especially if you are a moderate to low income borrower. So guys, if you think you might qualify, reach out to me, shoot me an email, leave a comment, and I can connect you with an approved lender, or if I'm able to help, I would love to help to explore your options further. And so remember, always compare different lenders to find the best programs, best rates, best terms for your specific situation, because mortgage lenders are not a one size fits all. I hate that I have to say that, but there are some that are just better than others, and make sure that they make you feel comfortable and confident in the type of program that you are being put in. Guys, thank you so much for watching. If you found this video helpful and informative, please give it a thumbs up. And don't forget, guys, to subscribe to my channel, your go-to YouTube channel for mortgage tips and home buying advice. Thank you. See you next time.